Support and resistance. Support and resistance is a basic form of technical study that every trader should learn. To make it simple, support and resistance are horizontal lines placed on the chart where price has reacted in the past. Think about support and resistance as the memory of the market. If we say that the Euro-USD dropped from 130 last week, in the event that price returns to 130, traders' memory of the drop would trigger a potential short trade. A support level is a level where the price tends to find support as it falls. This means that the price is more likely to bounce off this level rather than break through it. However, once the price has breached this level by a substantial amount, not counting market noise, it is likely to continue falling until meeting another support level. A resistance level is a level where the price tends to find resistance as it rises. This means that the price is more likely to bounce off this level rather than break through it. However, once the price has breached this level by substantial amount, it is likely to continue rising until meeting another resistance level. The best way to start drawing support or resistance levels is by using a top-down approach and line charts. Always start from highest time frame first and work your way down to smallest time frame. Try using different colors for different time frame. So it's going to be easier later on to distinguish what levels are current price reaching. Maybe a support that you found on a daily time frame, or maybe a support that you found on a 4-hour time frame. Your goal is only to search for strong turning points in the market. Place the line and move on to the next point, and that's all. So if we use the Aussie dollar for example, you're always going to start from the higher time frame. I like to stick with the daily time frame, but if you're a swing trader, you can start your support resistance searching from a weekly or even a monthly chart. So what we are looking here, first of all, would be to see where are we right now. Right now, we are around the lows. So we are looking for any strong turning point in the market from the left to the right. And it's always the best way to go from the left to the right, as much data as you can see on the chart. So over here, what we have is 1, 2, 3, 4, 5, 6, 7, 8, and final 9. Now, I know this seems as a lot of levels. So if you want to, let's say, remove some levels, it's fine. And the best way to do that part would be to just use the levels that weren't tested before. So if we are moving to the upside, try searching only for the levels that weren't tested prior to the current price action. Now, after you get all the levels done, all you need to do would be to put a horizontal line on each level. My idea is that you always use the line chart. And the main reason for that would be because if we go back to the candlestick chart, you will see a lot of noise in terms of that weeks and what market done. But if you ask yourself, what's really that significant point, you would always start thinking about that closing price, because how much we have, let's say on the highest point on this chart, we have price moved a little bit higher, because if we go over here, we don't see those weeks. And in my opinion, it doesn't matter what price done during that candle development. All that matter to me would be what happened at the close of that candle, because that close of the candle will be the only thing that will tell you, okay, that's what really happened in the market. Because if market wanted the price to continue to go higher, price wouldn't close at that low. it would close much higher. And that's the reason I love to use the line chart. Now, once we are done with the daily chart of the Aussie dollar, we just move down to a smaller time frame. In this case, that would be the 4-hour. And again, we are going to try to use the same approach, just trying to find that strong reversal point, and that's all. Now, in this case, we can see that we have only 6 levels because we didn't include the levels that were tested in the past and broken. So this would be the simplest approach to use. And again, what we need to do would just be placing that horizontal line, and that's all. Of course, in any case, we are always going to count for the levels that we see above our current price as the resistance points and the levels that are below the current price as a support points. So it doesn't matter really if you use the same colors for all of the lines or use different colors for support and resistance, really doesn't matter. So over here, again, we can see that if we move to the candlestick chart, that everything looks slightly different. But in my opinion, definitely will give you a better view. So you won't count down that market noise, you just count that correct levels to watch. So after we are done with the 4-hour chart, we move to the 1-hour time frame. And again, do the same thing. So we are going to try to find all the potential levels here. And in this case, we have only 1 resistance and 5 supports. And that will usually be the case as more that you go to the smaller time frame, you're going to see less and less levels. Especially if you don't zoom out and go with a little bit more history. But still, since you are going to combine all those levels from a daily, 4-hour and 1-hour time frame, you're always going to have a lot of levels on the chart. So I really don't need to zoom out that much to see a lot of levels. And again, procedure is going to be the same. Just drawing that horizontal lines, and that's all we need to do. Again, all the levels that we drawn below the current market price would be our potential support levels, and all the levels that we drew above the current market price would represent our resistance. Now, let's look at the Euro USD and start again from the daily time frame. So from the left to the right, we are trying to find some significant turning points in the market. Now, as you see, we didn't include really all the levels because you can find probably a lot more on the downside. But for start, you don't need to do it. You can only try to mark the levels that weren't tested before, just to have, let's say, a fresh support and resistance levels. Again, placing the horizontal line before we move back to the candlestick chart. So we can see what we want to do. If price move higher, we want to watch for that resistance levels to provide some sort of a resistance and turn the market down. While if price continue to push lower, we want to see if that low can hold or not. Moving down to the 4-hour time frame. Again, we have few levels. From that point, we are drawing the lines, and after it, we can move to the candlestick chart. Same thing. You see that I use different colors. You don't need to use the same colors as I do, but I want to try to have a different colors for a daily, 4-hour, 1 hour, 15 minutes, 1 month, 1 week, just to help me remember where I found the level when I later look in my trading. So 1-hour chart. In this case, a little bit more levels, but overall everything is same. So what we can see here that we are currently testing one of the potential support levels. This level already reacted and moved the market higher. So if price continue to move higher from this level, it's fine. We want to watch that previous first resistance levels as the next point of interest. If price continue to move lower and we break the level, we want to watch for those two levels at the bottom as a potential supports for the Euro USD. Now let's see. Swiss franc yen daily time frame. Procedure would always be the same. Finding the significant turning points in the market, drawing the lines, and that's all that we need to do. Always the same thing. If you go back in the history, you will start noticing that majority of the levels that you just drew was tested a lot of times in the history. And that's why we like to use support and resistance in the first place. It doesn't need always to be the case for every single level, but usually, let's say from 10 levels that you draw on your chart, at least 8 will be tested previously, at least a few times. So smaller time frame, same thing. Drawing the levels is all that we need to do. Let's see, dollar yen 1 hour time frame. We are in the uptrend. Definitely in this case, the reason I like to know support and resistance level is more because I want to try to join the trend. Let's say in this case we see maybe the uptrend. So I'm more going to pay attention on the potential supports than resistances, but we can definitely label them both. Just because if I think and believe the dollar yen want to continue to move higher, I want to see price reaching some support that will boost the price higher again. In many cases, price will move higher or lower without testing any significant support resistance level. And that's fine, because we can't always control why market is doing something. But still, if we draw support resistance levels, we know that a majority of traders will notice those levels as well. Just because everyone have a different view in the market, but everyone read exactly the same chart. And the first thing every trader will do would be to draw a simple support and resistance on the chart. And there are a lot of algos in the world that are just going to trade that support and resistance. So there is a chance for you to, let's say, predict when the next turn will happen. The more often a support or resistance level is tested, touched and bounced off by price, the more significant the level becomes. So if we see price testing some support area 3-4 times, it's going to have much better impact on the next test compared to some level that was never tested before or has been tested just once. We must understand that support and resistance levels can change their role if a level is breached. In the event price breaks below a support level, there is a good chance of it becoming a resistance level in the future. So don't be afraid of leaving your levels on. In case, let's assume dollar yen break 110 and you had it as your resistance point and price continue to move higher, and once we see a pullback, there is a good chance that that 110 level can offer a nice support, because a lot of people will still remember that 110 was important level earlier. Important. Support and resistance are simple technical approach that you must learn. Just remember to use them only in combination with other technical signals. So it's really not advisable that you place a trade just based on a support or resistance. You need to have more data and better conviction to have a good win rate with the support and resistance trading. We also have psychological support and resistance levels, which are levels formed by significant numbers. When price reaches a value ending in 50s, for example 120.50 or 12.50, or zeros, for example 130 or 13 just, traders start seeing a strong potential for change in the trend direction. Important, the idea of using significant numbers as your support and resistance will work better in stock and commodity markets, so you could ignore them in Forex. Definitely we can see, let's say if we get some round numbers in the Forex, seeing some momentum, but it's not going to be case that often, as you will notice when you trade some stocks or commodities. Now, it's time that you start practicing support and resistance. Just spend at least 1 hour drawing levels at as many charts as you can. And that's all I want from you for now.